Good morning and welcome to the studios of the Government Information Service for this special press briefing with the Prime Minister and Minister for Finance, Honorable Alan Shastney, on the recent International Monetary Fund and World Bank Group annual meetings. I am Nicole MacDonald. Also joining us is Permanent Secretary and Director of Finance, Ms. Esther Rigobert, and members of the finance team and the team from the Ministry of Economic Development. Also at the head table is the Chief Economist in the Department of Finance, Mr. Janai Leos. The government felt it prudent to have an update on the IMF and World Bank meetings in light of the fact that many of the sessions were in virtual format and due to the pressing issues raised at the meeting. Due to also the time differences, we know that several of those meetings were held in the wee hours of the morning, sometimes 5 a.m. and 6 a.m., and the Ministry of Finance team, Economic Development, and of course the Prime Minister had to be up to attend those meetings. So definitely we want to applaud the dedication there. Just to give you an idea of some of the sessions that were attended, we had the Caribbean Caucus meetings, which happened ahead of the IMF World Bank meetings. We had meetings with the World Bank Vice President, Governor's meeting with the IMF Managing Director, and of course the World Bank Managing Director. The Prime Minister was a panelist on a round table on access to finance for small island developing states. And of course, there were presentations on building resilience to natural disasters, open dialogue with Caribbean leaders, and also an Irish-Caribbean roundtable. Of course, there were other meetings intertwined into there. I now turn you over to the Prime Minister and Minister for Finance, who will deliver a synopsis of some of St. Lucia's concerns raised at those meetings, followed by a statement from the Permanent Secretary. Honorable Prime Minister.
Thank you very much, Ms. McDonald. Good morning, fellow St. Lucians. The World Bank and the International Monetary Fund conduct annual meetings in October each year. During our participation at the IMF World Bank meeting this month, there were several issues which were raised with the managing directors of these two institutions and other world leaders, and which are of particular importance to us here in St. Lucia. Whilst we are cognizant of the fact that there is presently a worldwide pandemic affecting all countries, we are sensitive to the plight of the issues confronting small island developing states, such as St. Lucia and our Caribbean neighbors. The COVID-19 pandemic has proven to be as much a health crisis as an economic one, and we are particularly vulnerable due to our size, geography, and location. At this year's meetings, some of the discussions centered around small island developing states and the impact of COVID-19 on our economies. We advocated for the international financial institutions to give close attention to the issues plaguing our economies. We articulated the concerns of our populace and the vulnerabilities which undermine our efforts geared towards economic growth. We spared no effort to show our development partners that the pandemic has presented a perfect example of how the idiosyncrasies of our region cause economic shocks to be exacerbated and lead to disproportionate effects on our socioeconomic landscape. Today, we'll highlight some of these issues and the specific concerns that St. Lucia delegation raised at the meetings, including some recommendations advanced, not just on behalf of our country, but also on behalf of the small island developing states in our region and globally. The COVID-19 pandemic has had a debilitating impact on many economies across the world. The pandemic has resulted in a marked decline in global travel and curtailed hotel, restaurant, and related tourism activities. Many countries, particularly in small island developing states, are trying to respond to the pandemic with large segments of their economy closed down, resulting in reduced revenues. This turn of events has in the immediate term led to the need to borrow in order to bridge the revenue shortfall and build capacity in the health sector, to respond to COVID-19 related illnesses, and to mitigate the spread of the coronavirus. Prior to COVID-19, St. Lucia had made a significant progress with its economic growth indicators and had attained a debt-to-GDP ratio of 60% as at the end of March 2020. The government has had to borrow funds from the development partners to help mitigate the economic crisis facing the country, particularly because the revenue of the central government has been significantly eroded, coupled with additional expenditures related to managing and augmenting the healthcare system. As part of the COVID-19 response, the government of St. Lucia had to increase expenditures on healthcare-related measures, such as the establishment of a quarantine and isolation centers, the rehabilitation of the Victoria Hospital, the move to OKEU Hospital, the increase in testing capacity, the acquisition of medical equipment and supplies, hiring additional healthcare workers, and maintaining health protocols. The country has also suffered massive unemployment due to the closure of the tourism sector, all necessitating social and economic relief measures aimed at providing support to the poor and vulnerable and to those directly impacted as a result of the crisis. Growth in the Caribbean region and St. Lucia has been relatively tepid and traditionally has relied on construction activity and tourism-related developments. Prior to COVID-19, St. Lucia recorded real growth of 1.7% in 2019, with expectations of 3 to 4% in 2020. St. Lucia also experienced a decline in unemployment during the period 2017 to 2019, which was driven by developments in the tourism and construction industry. While the decline observed in St. Lucia's unemployment was welcomed, estimates suggest that the unemployment as at early June 2020 went back up to 21%, primarily due to the effects of COVID-19. The debt-to-GDP ratio has spiked on account of projections of decline in GDP that could go as high as 20% for the fiscal year 2020. Prior to COVID-19, growth in St. Lucia's debt-to-GDP ratio was flat, with ratio fluctuating between 61% in 2016 and 59% in 2019. Given this initial estimates of debt-to-GDP ratio, St. Lucia was on a path to achieve the 60% target by 2030. For fiscal year 2020, tax revenues have fallen by more than 50%. Our debt redemption rate has been in the region of 25% this fiscal year. Lower revenues, increased expenditures, and significant debt redemptions have significantly affected our cash flow. A large component of the deterioration in fiscal sustainability for St. Lucia reflects increased borrowings to bridge revenue shortfalls and does not reflect fiscal slippage in the traditional sense. Despite the effects of the pandemic, the St. Lucia government has embarked upon a multiplicity of policy responses to help mitigate the effects of the crisis and to bring relief to the most vulnerable groups. Firstly, there was the development of the COVID-19 Health Response Plan. This plan was initially developed in March of 2020, but has since been updated to treat with the new emerging threats of the further spread of the virus. Secondly, there was the development of the Social Stabilization Program, which was announced on 8th of April 2020. This program allowed for the provision of income tax support, tax relief, and other social support measures which cater to individuals, households, and businesses most impacted by the pandemic. Thirdly, there was the development of the Economic Recovery and Resilience Plan, which was launched the 12th of July 2020. This plan encompasses a broad array of strategies to mitigate the impact of COVID-19. The ERRP was established on 6 pillars, 3 recovery pillars and 3 resilience pillars. These pillars are further broken down into 32 interventions, all aimed at sustaining and stimulating the economy while bringing about some level of recovery. Quite a number of these interventions have been rolled out, and the remaining ones will be rolled out in the coming months. It must be noted that this plan is very extensive and covers a rollout period of 12 months. Caribbean states, along with the global economy, are now experiencing another sudden stop to their main economic drivers and foreign exchange earner as a result of the COVID pandemic, which has altered the economic landscape of our economies as well as the development finance architecture. Caribbean islands have endured a subtle and more understated sudden stop, that being the stop to certain levels of official development assistance and concessionary development finance once a certain GDP per capita threshold is exceeded. This policy of penalizing countries for not maintaining the targeted debt to GDP ratio of 60% whilst embarking on growth-oriented policies has restricted small states, such as St. Lucia, from growing and developing at the pace they should. To attain the desired level of transformation needed to drastically catapult our economies to the next level, it is important that small states be rewarded for pursuing sound development policy, while also giving due consideration to the inherent vulnerability to climate change that characterizes the experience of Caribbean islands. The institutional constraints imposed by certain developed countries and international institutions on the economies in our region have proven to be very prohibitive. The severing of correspondent banking relationships with entities which are deemed high risk is having a severe impact on the financial sectors of many of the Caribbean nations. The adoption of de-risking strategy by global banks, which prevents correspondent banking services for domestic banks across the world, was apparently in response to a complex combination of factors, including increasing cost of compliance, change in risk appetite, uncertainty in cross-border transactions, mounting pressures on the local regulatory environment, and the Know Your Customer KYC requirements. The increase in the cost of compliance over the years has resulted from incidents of record-setting fines, criminal prosecution, and enforcement actions. While Belize has been one of the jurisdictions most affected in the Caribbean, St. Lucia is also facing challenges. Some money service businesses have encountered difficulties in opening accounts with domestic banks as a result of the pressure from correspondent banks labeling MSBs as high-risk institutions. Other domestic banks have decided altogether to do away with money services. Given the importance of international finance and banking services to economic growth and development, CARICOM has taken the proactive approach of pursuing discussions at various levels, both in the region and internationally, to identify the best means of addressing and mitigating the most reduced access to international banking and financial services markets caused by de-risking measures. Our region has been adversely affected by the blacklisting efforts of the European Union and other international bodies. As you may know, there's been a recent additions to the EU blacklist, including some of the countries in the Caribbean region. Luckily for us, we've been able to get off the EU blacklist and have established a territorial tax system in response to the demands of the EU as it relates to tax transparency. Under the territorial tax system, income arising from a source outside of St. Lucia is tax exempt. The tax system is further supported by the newly established Economic Substance Act, which requires entities to show that they are participating in income-generating activities. St. Lucia, although in good standing with the Organization of Economic Cooperation and Development, is still in the process of ensuring that we are completely in compliance with the EU tax requirements. We have advocated that the region needs multilateral support with combating the unproductive and unnecessary blacklisting of Caribbean countries through advocacy as well as technical assistance in the areas of more effective tax administration, enhancing the regulatory environment and strengthening the legislative framework for the anti-money laundering and countering the finance of terrorism. During the annual meetings, we stated our concerns with the blacklisting process adopted. Negative listing is often unwarranted and not conducted with the most consistent and transparency across countries. Blacklisting results in reputational damage and other repercussions which are far-reaching and are particularly difficult in the current environment. For the financial service centers, negative listings send inaccurate messages, damages trust and harms sectors that are viable and completely legitimate. Blacklisting is a deterrent to investment, which will be critical for the region's recovery. These negative ratings affect not only the countries that have been negatively listed, but the entire region. The IMF and the World Bank have both assisted small island developing states, including St. Lucia, since the onslaught of the COVID-19 pandemic by instituting the Debt Service Suspension Initiative and providing some funds under their rapid response facilities towards budgetary support and the healthcare response. This initial financing has focused on the health impact on the crisis through the procurement of equipment and supplies to treat the COVID-19, strengthening our health systems and the expansion of social protection for vulnerable groups. Whilst these have been very useful, they are certainly not adequate. We are of the view that there are other ways in which our development partners can assist and contribute to the economic agenda of sustainable and equitable growth. Some of these include reviewing the instruments that are used to assess debt sustainability. The dominance of the debt to GDP ratio and per capita income skew the discussion and do not differentiate between a fiscal position that a country is led versus a fiscal position driven by inescapable responses to the economic shocks. Ring fencing of all catastrophic debt. One proposal with respect to assessing solvency and fiscal performance is to ring fence all catastrophic debt from debt calculations and to use a moving average of GDP to compute the debt to GDP ratio. Simulations of such a metric would closely track GDP, but in times of shocks, smooth fluctuations due to external shocks. Establishing a development and resilience building fund. The Caribbean region over the past decades have made significant progress with respect to infrastructural and economic development. Sadly, these have been hampered by natural disasters due to climate change and other economic shocks. There is therefore a need for a broad-based development and resilience building fund to help overcome these hurdles and act as a buffer to these natural and economic shocks. Removing institutional impediments. The COVID-19 pandemic has laid bare the dependency of the region on tourism industry and its related services. With limited global travel and low levels of visitor spending the impact on the region is significant. Caribbean countries have tried to diversify away from tourism to financial services and related industries, but these efforts have often been stymied by the disproportionate international scrutiny and regulation which have impeded the development of these sectors. Providing multilateral support and advocacy. This is critical to complement the Caribbean region's collaborative work toward rebuilding travel confidence on a global scale. Support is needed to help the region benefit from new opportunities and to diversify their tourism products. For example, prolonged remote work programs will create an avenue for persons to travel to the Caribbean and work from here. This will improve revenues and foreign exchange earnings for the region. In light of the current situation facing our region, St. Lucia and the Caribbean countries have put forward the following key recommendations. 1. There is a need for a forum to look into the crowding out effect on growth and deterioration of our fiscal positions, which comes from the constant need to replenish our capital stock due to disasters, as well as revisiting the calculation of the debt to GDP metric to include either A, a moving average of GDP, or B, a ring fencing approach to certain segments of the debt, particularly catastrophic debt. Exploring new tools for mitigating against the debt instability observed after the global financial crisis in 2008 and to explore options to allow international financial institutions to assist Caribbean countries and develop innovative financing instruments which could provide relief to countries with high levels of debt. 3, the provision of finance to countries based on assessment of need and risk and not strictly on fixed country allocations. The use of the vulnerability index in the development financing arrangements would be a more favorable approach than the use of debt to GDP ratios. The diversification into areas such as agriculture and information technology to adapt to the post-COVID-19 reality. Exploring approaches to increasing food security through applying new technologies and digital solutions would serve to boost economic growth for and in the region. Providing support for reskilling and retraining our labor force to take advantage of the opportunities presented for post-COVID. 6, providing technical assistance and capacity building in various critical areas such as debt management, financial regulatory frameworks, financial stability, and cybersecurity. 7, investing in the blue economy and capitalizing on new areas to generate energy and innovative products which have the potential to accelerate economic growth. 8, support the disaster resilient strategies and climate change resilient assessments. Financial assistance earmarked for building resilience to climate change in small developing states such as the Caribbean needs to be explored. 9, establishment of a development fund or trust fund through which liquidity support can be channeled through grants or at a concessionary rates. 10, exploring possible de-risking strategies which will allow for the economic growth and fiscal stability for Caribbean countries. We've just provided a snapshot of the discussions held with the IMF and the World Bank during our annual meetings this October. We're very vocal and we were unapologetic in our advocacy. We truly hope that whilst these institutions are encumbered by political agendas and institutional constraints, there will be some swaying in the direction of reform and a more accommodating and favorable stance will be forthcoming. We thank you for your time and attention.
Thank you very much, Prime Minister Chasney. It's obvious we're still facing a lot of issues as small island developing states, even as we grapple with COVID-19. I now turn over to PS and Director of Finance, Esther Rigobert, to just deliver some brief remarks before we turn to questions from the press.
Good morning, St. Lucians. The COVID-19 pandemic has caused untold damage to countries across the globe, particularly vulnerable as small island developing states. On account of the economic shocks of COVID-19 pandemic, assistance from the international community is required in order to prevent a domino effect of protracted debt issues morphing into a financial crisis as we saw in 2008-2009. Should this occur, it would undermine the very economic stability of the region and could lead to a collapse of social safety nets and further erode our gains in poverty alleviation. Such a collapse and the ensuing ramifications will linger long after the pandemic and essentially stymie the ability of the region to meet existing debt obligations. This outturn, however, need not be the case. Prior to COVID-19, the government of St. Lucia and the nation was on the right path of economic development and growth. Notwithstanding, the pandemic has erased the gains of the prior years from all fronts. The COVID-19 pandemic has had a debilitating impact on our economy. However, the government has embarked upon a wide array of policy interventions to help mitigate the effect of the crisis and to bring relief to the most vulnerable groups in society. We all would agree that the crisis is twofold. A three-phase approach was therefore designed. The first phase, as articulated earlier by the Prime Minister, saw the development of a COVID-19 health response plan. The second phase resulted in the development of the Social Stabilization Program. And finally, the third phase saw the development of the Economic Recovery and Resilience Plan. All of these measures cater to different but equally important priorities of the government as it mitigates the crisis, and the rollout is expected to benefit a wide cross-section of society, particularly those who would have lost their source of income or livelihoods. The IMF World Bank annual meetings dealt with a wide range of topics, while focusing on the economic impact of COVID-19 and the ensuing short to medium-term fiscal and debt-related issues. Small island developing states like Lucia for decades have had to deal with the reality of economic shocks and interruptions to their efforts geared at economic growth and development, due in a large measure to climate change, natural disasters, lack of liquidity, and high debt levels. In just a few hours, a hurricane or storm surge could wipe away years of development gains and hamper future economic expansion. Caribbean countries are now in need of concessional financing and assistance from the international financial institutions, and not those measures that are tied to or rely on attaining a debt-to-GDP ratio of 60%. To attain the desired level of transformation needed to drastically catapult our economies to the next growth level, it is important that small states be rewarded for pursuing sound development policies, whilst also giving due consideration to inherent vulnerabilities to climate change that is characteristic of our small islands here in the Caribbean. It is clear that while climate change is impacting countries at varying degrees, it is an existential threat to the lives and livelihoods of many of our citizens. It is on that basis that special consideration should be given to small island states within the development finance framework. Given the importance of international finance and banking services to economic growth and development, there needs to be a review of the existing requirements for corresponding banking relationships. Global leaders need to take a proactive approach in addressing the impact of reduced access to international banking and financial services and markets caused by de-risking. The IMF World Bank annual meetings this year presented an opportunity for regional leaders to engage in productive dialogue with the world leaders, particularly the executive director and management and senior officials of the IMF and the World Bank, on issues that are particularly of interest to us. Our countries need to be viewed as partners and not expecting to be the beneficiaries of opportunities that we are not entitled to. As such, we made a strong appeal to the international financial institutions to facilitate engagement and dialogue at the highest levels as we all try to mitigate and manage the current pandemic. In light of the current situation, we made a strong case for our region, particularly as it relates to debt sustainability, resilience building, fiscal stability, creating buffers for climate change and natural disasters, and most importantly, protecting economic growth. On behalf of the Department of Finance and the Minister for Finance, I wish to thank all persons who participated in the annual meetings this year. Particular mention is made of the staff, the IT team, and other technical officers within the Office of the Prime Minister and the Department of Finance, as well as the Department of Economic Development. It was indeed a rewarding experience, particularly taking the meetings virtually, but I think in all, we had a very productive set of meetings with the World Bank and the IMF, and I think we are the better for it, knowing that we made a strong case for the issues that matter most to our country. With this, I wish to thank you for listening.
Thank you very much, P.S. Rigobert. Of course, we now move to questions. Just to remind everyone, we also have the Chief Economist, Mr. Janai Leos, at the podium, who will also be answering questions as support. And of course, I neglected to mention earlier, we have our Accountant General with us, also Mr. Matthew Branford, who will take questions if needs be. I now open the floor to the press. just head up to the microphone and just identify your media house if you have a question. If you are joining us via Zoom, we will also take a question. I don't know if we want to start with those in the studio. Yes, just go up to the microphone.
Lucia for HCS. Prime Minister, you spoke of wanting an adjustment to the debt to GDP ratio, considering the reality of COVID-19, so there wouldn't be an impact on the GDP. Was this part of the discussions with the IMF? And if so, will that breathing room be granted?
In fact, these discussions really started post the financial crisis and continued in greater intensity during climate change, because we were having the same difficulty, and the pandemic now has just brought it to urgent proportions. And we've offered, if you noticed, two possibilities. One is the moving away from a debt to GDP ratio, because the debt to GDP ratio is preventing development agencies from giving us greater access to concessional funds. So we've offered two possible solutions. One is to move to what we call a vulnerability index. That vulnerability index was actually established in 1989 by the Commonwealth Secretariat. And the second one is what we've classified as catastrophic debt. So the debt that we're taking on because of building resilience, reacting to a hurricane or some exogenous financial impact like the pandemic, that the monies that we're borrowing for those specific things would be ring-fenced and not be considered as part of our debt to GDP. We would be required to repay it, but it won't. And I think that we have the World Bank's attention, because if you will remember, St. Lucia's credit rating was downgraded just after the pandemic. And while the debt to GDP ratio, according to them, was not the primary reason for being downgraded, they were more concerned about the medium-term recovery of the tourism sector. In not resolving this issue could potentially lead to further downgrades, because it's what is being used to measure the financial viability of the countries. I would like to say to you that there was a sensitivity to this issue, but I would say to you, like what has happened in the past, how to solve the problem still seems to elude both the IMF and in particular the IMF and the OECD. And the reason that was given to us for this is that if they make an exception for the small island developing states, then they believe that there are other regions around the world that would also ask for the level of exceptionalism. So I want to say to you that we're encouraged that the empirical evidence, as the Director of Finance indicated, was well articulated and accepted, but what that solution is going to be, we still don't know for sure. But we're impressing upon them that it's something that needs to be decided sooner than later, because in the absence of a solution, it is going to have an impact on our midterm policy positions. So how quickly we have to readjust to those old numbers is going to be very critical to us.
And that would have been my second question. Given the fiscal position of St. Lucia, how urgent is the need for the IMF and the World Bank to take into consideration the key recommendations that you outlined earlier, if a timeline had to be placed on it?
So we normally put the IMF and the World Bank in one basket as two similar institutions, and in fact they're very different. The IMF really is the regulator, the auditor, and the policy maker when it comes to fiscal positions. And the World Bank and CDB and all of the other IFIs take their direction from that institution. So I think it's very important that we make a very clear distinction here. How those ratios affect us is the amount of monies that are made available for what we call budgetary support. So there's still some confusion in St. Lucia by many when they hear that the IMF gave us the rapid response and CDB, etc. the vast majority of those monies in this particular instance, and that's where we were extremely grateful, were allowed to be, were being used for budgetary support rather than specific programming. And that's huge, because with the shortfall of tax revenues, the redemption of 25% of our bonds, that's $175 million the government of St. Lucia has had to find to put out in cash, and the depletion of the GDP. Those three things have created this fiscal deficit, and it continues to vary, because if the GDP rate continues to go down, it's going to create a bigger problem. If in fact bonds have a higher redemption rate, that's going to create a problem. And if we in fact see a further deterioration of tax revenues, that's going to create a problem. So the argument that's going on here that needs to be resolved is, in the next budgetary cycles, are they going to allow funds to be used for budgetary support? And that is really what we're depending on the IMF. So the World Bank's role is to assist us in technical support to bridge that gap with the IMF. So when, for instance, we had to adopt fiscal rules, the fiscal rules that were in existence, St. Lucia resisted that because we felt it was too confining, and it was really not the remedy that St. Lucia needed. And it was the World Bank's technicals team that were, over the last year, able to come up with an alternative way that was eventually accepted by the IMF. So we are leaning heavily on the World Bank, on CDB, and the central bank for all of us to work collaboratively together to figure out how we can amend the IMF's policy and work with them on a policy that's going to help resolve this issue. And that's work that's ongoing currently and needs to be expedited, because the budgetary process has already begun. And so these are some answers that we would need before the end of the year in order to make sure that we're not overreacting to the crisis.
Thank you very much, Prime Minister. Thank you, Solange. We also have some questions via the Zoom platform. As I mentioned, we have quite a few media houses who are joining us via Zoom because of the space issues. So I now turn over to the Zoom. Please identify yourself and go ahead with your question.
Hi, good morning. This is Janika Simon from the Virgin Islands Consortium. This is a policy question, so I guess it would be addressed to the Prime Minister. Obviously, we were not privy to the recent meetings, but the IMF has been, issuing some statements, blogs, etc., etc. So on that, I am asking, what is the policy response from St. Lucia in terms of the IMF suggestion that countries in the region focus on social support for people who are still without jobs after 7-8 months, people who are struggling economically? I note that I believe that most of the stabilization programs that were implemented have already come to an end. So what is the medium-term or even long-term policy approach to that to keep people from starving and being put out in the streets?
So I think that Janika is a really great question, and it really talks to the three-phase approach that we've had to this. So the first thing was to deal with the pandemic itself. So the shutting down of the country and trying to understand this virus, because back in February and March, I would say to you that for the most part, we treated the virus as if it was the plague. And there was a lot we didn't know and understand about it. We have a much greater understanding of it now. So the first part was to stabilize, which we did. We continued the stabilization, but now understood the economic and social impact of the shutdown. And so therefore, the income support programs, the feeding programs, the educational programs, the respiratory centers, all of those things became part of phase 2. And we have to applaud ourselves, because St. Lucia probably did it better than most countries in the world. At that point, we only had 27 cases. We were able to, we prevented anyone from having to go to hospital, which would have been additional expenses if that had happened. And we were able to avoid all those things. In the second phase now, what we talked about was now entering in the third phase. Was we understood that given the deficits that we already had, you're talking about close to $500 million of borrowings that we had to take on to replace the loss of tax revenues, to replace the replenishment of the bonds that were being turned over, as well as the drop in the GDP rate, that those are the three things that we had to fund. We knew that we could not sustain that for a long period of time. And so therefore, learning to coexist with COVID, which meant that we had to be able to open up our economies and get traction on seeing the recovery of our economies. So agriculture, manufacturing, ICT sectors, and tourism and offshore financial services. And we've seen a tremendous amount of success. We're way ahead of where we were expecting to be. We opened up our doors in June. We started seeing an increase in arrivals in July. And here we are going into the month of November, well advanced on our prognosis of January, that 80% of our hotels would be reopened. We were on with British Airways this morning, very encouraged that the airline industry now is accepting that pre-testing at the airports is the way to go. So American Airlines and United Airlines' programs to Hawaii of pre-testing has seen a huge increase in demand for those routes. So globally, the airlines now are finally realizing that the pre-testing, which is what St. Lucia has done from the onset, is the way to go. So, Janika, the goal has always been that we can't afford to continue the income support program through the government, but if we can get the economy to recover and people now start getting re-employed, that there would be this combination. So you saw that the banks initially gave a blanket waiver of moratoriums for the first 6 months. They have now extended it for another year, but instead of being a blanket moratorium, it's now going to be targeted to those persons that need it. The government is doing the same thing. So instead of a blanket social and economic stabilization program, we're getting the economy to go back up and then continue to provide support to those persons, those vulnerable persons that are still not seeing that level of recovery. So your vendors, your taxi drivers, your attractions in particular, that while tourism is opening up, it really is in a very controlled manner. But the revenue now that we're generating from having those economies opening, and we're seeing over the last couple of months that our tax revenue now is showing some strong recovery rates, and the curtailment of expenses, that the combination of those two things are now affording us the opportunity to make sure that we have revenues available to target. So the last piece of this that we spoke about, Janika, from the beginning was cash flow. We knew that while we had gotten approvals in principle from CDB, from the World Bank, IMF, and from the Taiwanese, that it would take a period of time before that cash actually came in. So here we are, we're hoping that by December, that we will have the $30 million or $35 million US from CDB. We're going to the World Bank board meeting in November, and we're hoping the final approval will be at the end of November, and that we would get the monies at that point. And we've got approvals from the Taiwanese, and we believe within the next month or so that we should start seeing that money. So that's $100 million US that will be coming in for budgetary support for the government. So the combination of the recovery in tourism, a significant amount of growth in the ICT sector. We've seen ITEL BPO over 750 jobs, OJO, GROW, and KM2, just to name a couple. We've almost doubled the amount of employees that we had pre-COVID in that sector. We saw that agriculture, for the most part, was not affected because when the tourism sector dropped, our social stabilization program of buying food helped significantly with the farmers. We're seeing in the retail sector that many people are now starting to get back to their pre-COVID revenue numbers, sales. So the third phase of our program is working. The road construction projects, the airport construction project, the West Coast Road project, the St. Jude's project, the police headquarters project, and now we're also seeing a significant amount of private sector foreign direct investment. Cabot, Canals, the Daher Mall, and also Point Seraphim are all trending really well in terms of getting off the ground before the end of the year or by January the latest. And these are all going to make significant contributions in adding, reducing the unemployment and creating money in circulation. So that has been St. Lucia's strategy, and I have to say to Janika that the World Bank and the IMF, and well as the regional institutions, have really applauded St. Lucia on how well this was thought out, but more importantly, how it's being executed. And even right now, with the cases that are coming in, there's even greater confidence because it shows that the Ministry of Health and particularly the contact tracing group have done an outstanding job. The most recent cases all are in quarantine. We're still well below the threshold that the WHO has established to say that St. Lucia is unsafe, so we're maintaining that current status, which is important in the UK and the US for our tourism numbers. So all in all, the combination of the three phases and where we currently are working.
Janika, I have a feeling you have a follow-up question. Go ahead.
I always have follow-up questions, Nicole. Thank you very much. So, Prime Minister, I am understanding that you're saying that there will not be any further income support for people coming from government coffers. That's just a yes or no. And then the second question I have is also coming out of recent IMF correspondence. They are really encouraging governments in the region to put a lot of focus and effort into diversification. Now, I know that you spoke very extensively about a tourism recovery. People are divided on that. Some people say, yes, next year we're going to see a rise. Some people say tourism is not going to come back until 2023, 2024. So on a policy front, just to make sure that economically we are not placing all of our eggs in one basket, where are we going in terms of diversification? I noticed you mentioned the ITEL BPO and those other type of companies, but what else are we going to be pursuing in the short term to help get more sources of diverse revenue into the country?
So the answer to your first question as to whether we're going to be providing any further income support, yes, we will be. It's just on a targeted basis. It's not a macro policy position. There was extensive discussions with regards to tourism. St. Lucia led that discussion where we talked about when we use the language to say diversification from tourism, it can be very misconstrued. The reality is that tourism industry is an industry in which the Caribbean has a comparative advantage. It's also an industry that's very difficult to find a substitute for. Very few industries can generate the foreign exchange, can generate the employment, and can generate the linkages back into our economy. We also know that in pursuing tourism development, it doesn't come at the expense of agriculture or the ICT sector or the financial services sector or manufacturing or the orange economy. In fact, tourism complements all those things. The more you can grow tourism, it strengthens manufacturing, it strengthens agriculture, it strengthens the orange economy, it strengthens the financial services, it strengthens the ICT sectors. So there is a way, And we've shown that tourism can come back. The piece that was missing was the global consumers' confidence to fly. That's what the problem was. And we kept on saying, pre-testing, like what happened after 9/11, where the new security policies came in, which strengthened again the recovery in the air aviation industry. We've also argued, Janika, that we're not going hat in hand to beg. IATA has indicated that the airline industry is burning through $300,000 US a minute in cash. And many of these developed countries depend heavily on their airline sectors, whether they're manufacturing or providing services. So the Caribbean, because we've done so well with COVID, is a great place to start and test out these new protocols. And so there's a role that we have to play in that regard. And so getting the tourism industry isn't very important to us, but it's equally important to the developed countries. 66 cents of every dollar a UK citizen spends on vacation in St. Lucia goes back to the UK. Almost 80 cents of every dollar an American spends goes back. It's their brands. We're buying supplies from them. It's their airline, it's their tour operators, their travel agencies. And so we're showing them that in helping recover the tourism sector, yes, it's helping us, but it's also helping themselves. And again, because of the success that we've had with COVID, the Caribbean becomes an ideal place to start those initiatives. And we started seeing that buy-in on it. So there's not about a diversification of our economies is not at the expense of continuing to grow our tourism sector, but to look at other things that we can do that can now make sure that we're taking advantage of those opportunities. So the financial services sector, what we're doing right now with the territorial tax structures, the residency program, our CIP program has seen an upswing of almost 130% over last year. The orange economy, because of technology now, persons learning how to copyright their music or copyright their products don't have to be in the States or the UK. We can sell on an international platform. Microsoft has indicated that all the persons who currently are working at home will continue to work at home. So all of a sudden now, there are global companies that no longer are going to be restricted by borders to hire people. And so the question is how quickly, and that's one of the things we asked the World Bank to help us with, is to do the research of what kind of jobs are going to be available, and then that can impact our education system so that we can better prepare persons to work from home, work from St. Lucia, and provide these global services. What we call the e-nomads are persons that now realize that they can work remotely. And Barbados has done a great job in putting out the visa. St. Lucia has our Headquarters Act and our now residency program to be able to provide the fiscal policy space to allow more persons to come in that regard. What we're doing with banana industry, with what's happening with Windfresh and the new branding initiative that we're putting out with our bananas, the growth of cocoa. Cocoa and bananas have the ability, because of the consumption globally, that we can use a lot of unutilized land right now to produce those products. Fresh produce is limited to the consumption on island and immediately what we can do within the region. And they don't use a lot of labor, and it's not very land intensive. So that's why bananas and cocoa are so important. So what we have to do a better job of is maximizing the output per acre of our country. And it requires a combination of making sure that the indigenous banks make more monies available for the productive sector. We're seeing that the banks are very happy to lend money for cars, very happy to lend money for houses, but they're not helping money with small businesses. And we've seen the World Bank and the IMF agree with us on that and create more facilities and work with the banks to try to broaden that opportunity. There is a lot of liquidity in the Caribbean, meaning there's a lot of people who have monies in the saving account. We've seen no depletion of that, and we're going to have to figure out a better way to tap into those funds, particularly because the return that persons are getting on their savings accounts is so minimal.
Yeah, thank you, Prime Minister. I know that the PS may have wanted to chime in on the issue of diversification, but maybe we can save that for the wrap-up comments as we move to another question in the studio.
Good morning, Amani Mathra, Choice TV. In terms of the IMF's recommendations for the region, one of them was a suggestion that select businesses or sectors will need continued support to mitigate the impact of prolonged layoffs or unemployment. So my question to you is, apart from tourism, which sectors are we currently seeing as the most vulnerable? And what are the current or immediate plans to put targeted support into these sectors?
Thank you for your question. Okay, so you are indeed correct. We have been advised that we need to broaden our support to sectors in addition to tourism. And like the Prime Minister very well articulated, you can do so in many ways. So it's not at the expense of tourism. So growing agro-processing, growing your ICT sector, your financial services regime, it doesn't diminish or deplete the importance or the growth of tourism. We would have spoken earlier about the Economic Recovery and Resilience Plan. If you take some time to go through that document, which should be on our website as well as the Government of St. Lucia's website, you would see a wide array of interventions, 32 in number, and it covers all sectors. So there is, you talked about retention of employees. One measure we presented for uptake by the private sector would be what we call an employee retention program. So under this program, companies are encouraged to retain their employees even if they're faced with fiscal challenges, and they receive in return relief from the taxation, corporate income tax. So that's been rolled out already. So that's one measure the government has implemented to help with employee retention, not just for tourism, but across the board. We also have other measures such as the program with the SLDB, where funds will be made available to small and micro enterprises, part in grant and part loan, so that it will allow them the space, the liquidity space they need to maintain their operations, expand, invest in ICT, as well as resilience building. So that is a lot of groundwork has taken place under those measures, but it shows that we're not just targeting tourism. With respect to the headquartering regime, that's always existed in St. Lucia. Currently, it's part of the International Business Companies regime, and efforts are afoot to detach these two. That's in response to the EU blacklisting and OECD scrutiny and regulations. And the intention is to have a separate headquarters act to encourage international companies to come and establish their headquarters here in St. Lucia. Many benefits can come out of this enterprise. Increasing jobs, there'll be more consumption by employees and executives of those companies. And it will also help develop the skill sets of our employees. So in accounting, legal services, ICT, once you have those international companies establishing their base here, you are really giving an opportunity for St. Lucians to get jobs, but also to develop their expertise and to grow professionally. We spoke earlier as well in terms of your small businesses. There are a few interventions separate and apart from the funds to be made available through the SLDB, where they will be getting technical assistance to establish either a new enterprise totally or to expand what they currently provide. So diversification, just for clarity, is not moving away from tourism. It's looking at all other sectors where there's viability, where there's growth potential, and ensuring there's liquidity, capacity building, and technical support so that these can complement our tourism sector. I don't know if Mr. Leos wants to add anything to this in terms of the 32 interventions. It's so many. Some of them focus on construction, some on small businesses, tax relief, income support. So he would elaborate further.
Diversification did feature in the meetings that we had with the IMF World Bank, and we indicated to those agencies that whereas the call has always been made for diversification, many times the region finds itself, when it does diversify into an area, that you get this disproportionate level of scrutiny, with our offshore regimes and our IBC regime being the most recent. So we really wanted to get from the international community that support. If you are going to advise that there is some level of diversification, which the region has pursued, the international community really needs to have proportionate levels of regulation where there is risk. If we look at our IBC regimes, if we look at our CIP and our other regimes, the level of risk that is associated with those relative to the global pool is extremely small. Yet still those services receive a level of scrutiny where some may even ponder whether the international community is trying to just shut down all of our industries like that. So we wanted a nuanced debate with the international community to say, listen, the region has pursued a multiplicity of efforts to diversify, to ensure that you have that stability in revenue intake, so that revenues are not necessarily contingent on one sector. But you need that international community support to say, yes, we hear you, and where you do diversify, we are willing to provide some level of support. And yes, we are willing to also regulate, but that regulation should be proportionate to the risk that you bring to the global community. And if you look at our region, or the Caribbean region, there does appear to be a disproportionate level of scrutiny of our region relative to some of the other jurisdictions. So those arguments and those discussions did come up, and I think we made some headway in that regard.
I think Solaj had a follow-up question.
It's a follow-up question from what Janika asked in regards to the income support. You mentioned that a targeted approach would be identified for that. I think St. Lucians might need some clarification. They would desire that. So my questions would be, how will these individuals be identified? How will these funds be distributed? When will this commence? And where will the funds come from? Will it be from the 100 million US for budgetary support or other?
Yes. Thank you for the question. Okay, so let's just establish that income support is not just giving monetary stipend to persons. It's very broad-based. So currently we have the electricity assistance program. That's a form of income support. We have 4 categories of persons who will get relief on their utility bills for 6 months, starting October and ending in March of next year. And that includes all those who did get the income support in terms of the cash outlay and transfers, as well as other persons on the poverty list, persons living with disability, persons living with HIV, and so on. So this has been rolled out, and we estimate about 5,000 persons will benefit from this form of income support. Additionally, we have other measures to provide relief to small businesses. So we've given some assistance to Bell Fund, and as well as, like I mentioned earlier, your SLDB. That support to small businesses, micro, not just established firms, but it could be a household, an individual wanting to start a small business. They will get part grant and part loan with good terms, concessional terms, so that they can commence operations, employ some persons, and provide for their families. So when we said it's targeted, it's specialized interventions, get at specific groups within society to give some liquidity support, relief, so that they can survive and take care of their day-to-day needs. So these are just 2 quick measures. There are others. I don't know if Janai wants to add, but a good reference would be our ERRP plan on the finance websites and the Government of St. Lucia websites.
I think just to add to that, PS, in terms of the Minister of Finance, we have mentioned about the sustainability of the measures. I think what we have done is to recognize that the poverty list is a great starting point in terms of providing targeted relief. And that is why you have seen efforts to actually expand the number of households on that by an additional 1,000. As time goes on, we would see whether there may be even calls to expand that further. But the approach has definitely been where we have existing systems that determine whether somebody is poor, is indigent, or what have you, that we focus the efforts there and we strengthen those the level of support that is received there. So in some of our other assistance programs, we would have increased those by $100 or $200 in some instances. Let's see what the next 3 months, 6 months bring, and we may need to actually expand those further. But I think the approach has really been where there are existing systems, strengthen, expand, and then to the extent that you do see that economic turnaround, it would allow us to determine whether we need to expand that by an even larger magnitude than what has been done now, or whether it is sufficient and the domestic economy can now absorb some of those persons.
Prime Minister, did you want to weigh in on that question as well?
I just want to follow up on what Janai said, because that's very, very important. The institutions and the mechanism that we've had to identify vulnerable people in our society has failed us for a very long time. The number of persons was 2,300 people that were receiving income support. And that number was not because that's the number of people that qualified. That number was there, that was because what we could afford. And so this is why when we talk about restructuring the tax system in this country, so the idea that we're subsidizing rice, flour, and sugar, which is intended to help the more vulnerable people in our society, in fact, there are a lot of people who are benefiting from it. So there's money that's leaking out in the system. Our VAT rates, the idea that we're going to eliminate VAT or reduce the rate of VAT to help poor persons, but in doing it, everybody benefits from it. So what we've been talking about with is adjusting those structures so that persons who can afford to pay are paying, and that monies now are being made available to directly help support the more vulnerable in our society. All of it. The health insurance program that we're looking to introduce, again, will make access to health care to more vulnerable persons in our society. The new e-government platform to make it so you don't have to come up to Castries to access information. All of these things were on track pre-COVID. COVID has shown us we need to move even faster. And so this is where the government is spending its time. I also want to say that, going back to the other question, if I may, Madam Moderator.
Yes.
Tourism is a huge industry. And we saw, I happened to be the Minister of Tourism at the time when we had the financial crisis. And it caused us to ask the question, who are we or what are we in tourism? And we came up with the idea that we were romantic. And we understood that that sector in the tourism industry was much more income resilient. A person who's going to go and get married and honeymoon is going to spend the same amount of money regardless of what their income is. Persons who are going to take somebody on a date for the first time are going to spend proportionally much more money than when you're going to go on a family vacation. So again, that lesson has taught us a very important lesson, in that diversification also comes within tourism. The Gros Islet Sports Academy is started off as being an academy for our local students, but the goal is to expand that and also to go to the Marceline grounds and to do something at Bean Field, where we're now going to offer sports academies for the region and internationally. So we're going to have persons coming here. Health tourism. We've talked about it. We don't provide tertiary level health care for solutions, but the goal is now to provide tertiary health care. To help support it is going to require persons to come from abroad. What we call residency tourism projects. That's what Cabot is. That's what Windjammer Landing is. That's what DSH is doing, putting in the necessary infrastructure to attract people to come and want to buy homes in St. Lucia. Sugar Beach. St. Lucia has had the greatest amount of success in that particular that tourism sector. The horse racing track. is an international sporting event to try to now draw people in and to get into the online gaming business, which never happened before. So the diversification is taking place every single day. The World Bank and the IMF absolutely agreed with St. Lucia's strategy. And the managing director of the IMF, Kristalina, came out very early and said, build as much as you can build and keep the receipts. And so the idea of investing in infrastructure, continuing the airport project, fixing up the roads, getting the water problems resolved, looking to get the port situation resolved here, the redevelopment of the Castries market, the redevelopment of village tourism, which opens up now Airbnb, which is another huge tourism sector. Persons after COVID, many of the persons don't want to go to the large resorts. So they want to come now to smaller properties. Putting in the infrastructure in ancillary, canneries, Soufrière, and eventually into the other villages are all a mechanism to help now with that diversification program. So I just want to say to you that diversification is within the tourism sector as well, and not being dependent on the mass all-inclusive vacations. While there's still a market for that, the diversification is taking place as well in other sectors, and we're putting in the infrastructure to be able to support that.
Okay, we'll take a few more questions. One on Zoom, hopefully, and from Amani. Go ahead. Microphone.
Given our current economic difficulties, many people are wondering, will the situation cause the government to accelerate moves to open our economy to the benefits of the cannabis and its various cannabis industry and its various byproducts?
So my understanding as to where we are with that is that the draft legislation is being prepared. And I'm expecting a presentation hopefully any day now at Cabinet. And then once we've received that, then we will proceed to go to Parliament. I'm very happy with the consultation that's taken place. Let's also recognize that there is a very evenly split in St. Lucia in terms of what we're attempting to do. The polls show that 51% of the people support. So if you take a margin of error of 4%, you can say that it is split right down the middle in terms of what we have to do. I'm hoping that with the evidence of what's taken place in other countries, that some of the concerns that people have with regards to the health impact of legalizing or decriminalizing cannabis, hopefully we can find that level of compromise. But we're at the stage we're at right now. Consultation has taken place. We want to actually see it in the form of a draft legislation so we understand in greater detail what we're talking about, and then there will be consultation to make sure that when we go to Parliament we do. But I do agree with you that there is some opportunity that is there, and we are at a place where we have to take advantage of every single opportunity that exists.
We'll take a question via Zoom now. Just introduce yourself and your media house and go ahead. Our journalist via the Zoom platform, go ahead. Oh, Lovely sent Emmy from Hot 7. Please go ahead with your question. Okay, I'm not sure Lovely's hearing us. If you are, please go ahead with your question. We can hear you. Okay, we may be having some technical issues. Okay, so we're not getting the question from Lovely. If we have no other questions, okay, go ahead. One more question before we wrap up. Two.
Just a follow-up from Amani's question. We know that the Rastafarian community had filed some legal documents against the AG's office regards to their sacrament. Will that then force the government's hand in the decision that it ultimately makes with the cannabis law reform?
We're a very law-abiding government, And so if in fact there is an order by the court, will always be undertaken. But at this point, I can say that the consultation included the Rastafarian community, and I think that there is recognition of what they were saying. And I know that some persons would like to see this happen today and not tomorrow, but there is a process, and I think that we have taken our time deliberately on this very sensitive issue.
My other question, there is concern from certain factions of society that the island may be digging itself into a very deep debt hole, and the impacts may not be felt by us now, but by many generations to come. So what is the island's ultimate plan to ensure that we are not consumed by mounting debt and that our future generations may not incur debt?
Thank you very much. I think that's a very important question to end on. I'm certainly going to allow the Director of Finance to weigh in, but let me say this, that from the get-go, we have taken into consideration debt. The road construction and the airport, all are coming from dedicated revenue streams. So the spending on roads is within the containment of what we've seen that we've been collecting. Gas tax dropped, I believe, in the March and April period as much as 50 or 60% of what they were. And we've seen a recovery in the last couple of months where the revenue is down, I think, about 13 or 14%, if I'm not mistaken. Yeah. And so we think that by the end of the year, we would probably see a drop off of maybe somewhere between 15 and 20% of the gas consumption. And all indications are we're seeing a good recovery in that sector. So the monies that we have borrowed from the Taiwanese have had a 5-year moratorium and a 15-year payback. The direct finance awards that we're doing, on most part, anywhere between 18 months to 2-year moratorium with a 3-year payback after that. We did it so that we could not have the direct finance awards competing against the Taiwanese loan that we're doing. So that is being properly managed and within our limitations. The funds that we've borrowed from the World Bank and from the CDB and everyone else are extremely concessional. In some cases, we have 5-year moratoriums, and in some cases, we have 10-year moratoriums. We're talking about 0.5% interest over anywhere between 30 and 40 years. So we know that we are in a very good position to repay those loans, and everybody has acknowledged that part of it. What we've been fighting is that it's considered debt and the impact it's having on the debt to GDP ratio, and how the debt to GDP ratio is used to evaluate the risk of a country. That's the fight that's taking place. And sadly, we didn't have a choice. You know, as I said, when this thing hit and the airline industry got shut down, countries put quarantines in place, and tourism got shut down, there was immediate impact, the loss of tax revenues. Persons wanting to redeem their loans. So other companies and individuals needed their cash. It wasn't about not having confidence in St. Lucia, they needed their cash. And so we knew that there would be a certain level of redemption. These are the spillovers that have taken place. So the monies, and I think that individuals, and I can understand it, are not understanding when they hear the IMF say that the money is supposed to go to a particular purpose, or the CDB money is supposed to go to a particular purpose. This is all really primary for budgetary support. In the case of the IMF, the monies cannot be used to pay debt. So the flexibility of the IMF money was much less than, for instance, the Taiwanese monies, or even the World Bank monies, or the CDB funds. So it was to assign the monies where was best proportion, but they were all trying to fill this budgetary gap. And the question is, how soon can we see a recovery on revenue? So when are we going to see a slowdown in redemption of bonds? And are people, in fact, going to actually start buying back bonds? And we're starting to see that to some extent. 2, how soon can we see an economic recovery where tax revenues are now getting back to where they were before? And are there opportunities to actually see growth? And that's what we're seeing. We're seeing that there is opportunities of coming out of this thing even stronger than when we went in. So we are not concerned at this point with some of the naysayers that are talking about this mounting debt. The debt is being well financed and it's well within our stream to resolve. The critical issue is not to have to continue to borrow monies down the road. And are the World Bank, IMF, and CDB going to make concessional funding available past April 2021 at those same rates? And that we can use those funds for continued budgetary support? And to what extent is there going to be a gap? That is the discussions that's really taking place now, and we'll hopefully conclude by December that we have a very clear idea, because that's going to significantly determine how austere our budget may have to be next year, and whether we have to push even harder on income diversification to generate additional income for the state to cover some of these deficits. But the monies that we have borrowed are extremely concessional. The monies that are putting into roads and the airport all have their own revenue streams. And if I can just indulge maybe one more thing with you. Foreign direct investment is more important today than it's ever been before. Because there isn't, we know that, enough local revenues to drive the level of investment that we need to see. So if in fact the private sector can step up and take on some of this investment need, then it means it's not incurring additional debt for the state. This is why it's very worrisome when we see the kind of rhetoric that is so anti-foreign investment in this country. Whether it be Cabot, whether it be a person who bought land to build a house, Ojo Labs, DSH. While it's okay to question the government's policy and strategy, but to transfer any of those concerns to individuals, corporations, or individuals is very worrisome, because you can imagine foreign investors now have even more places to go. So here we are working very hard to gain confidence of both the financial institutions as well as foreign direct investors. And we have some in St. Lucia who seem intent to destroy that. And I'm really hoping that the media will stand up. And I'm also hoping that the private sector associations, the Chamber Manufacturing Association, the Bar Association, will also stand up and condemn this kind of behavior. We need foreign direct investment in this country. It's always been part of our development plan. And with what's taken place with COVID, if we are to grow the economy faster, generate even more revenues to cover what we have to cover, foreign direct investment is critical at this juncture.
Thank you, Prime Minister. I think you covered most, if not all, of the areas. And just to add or reiterate that the borrowings that we have embarked upon this year are highly concessional. The Prime Minister referred to the rates below 1% on average, and moratorium can range from 5-10 years for most of these borrowings. Secondly, the international financial community, the IMF, World Bank, CDB, ECCB, and so on, would not, under any circumstance, borrow to a country without that kind of confidence that it can rebound and be able to service those debts. So whilst there is concern, and rightfully the public can question the government's policies and so on as it relates to borrowings and debt management, but there would need to have been a good assessment of the country's ability to regain its pre-COVID levels of revenue, as well as embark upon additional economic growth undertakings. So just to calm the fears in terms of the borrowings, we would not have been entertained or facilitated with any of those borrowings without that kind of assurance and confidence in the economy and what the government has done, as well as what the government is undertaking. To add to this, the borrowings are largely targeted to special projects. So the Prime Minister referred to the Hirono International Airport redevelopment project, the rehabilitation of roads, and so on. And these, they have the targeted streams of income. So that would not significantly impact central government's cash flow in terms of honoring our debt obligations. And the last point I need to make, the crisis, like we established before, is twofold. There's the health components and the economic components. And I think for the greater part, thus far, the government has managed both reasonably well. In fact, very well from the health front. But now the focus is the economic fiscal situation. And there's talk about us being on the edge of a precipice, and that is not so. The entire world is going through this crisis. And for the greater part, St. Lucia has managed it very well. And if the IMF says so, the World Bank says so, and CDB is comforted, I think that's enough assurance for the rest of St. Lucia to believe and appreciate the efforts of the government in terms of its strategies to mitigate the crisis. And just to wrap up, I think time is against us. I'd like to really commend the government, the Prime Minister, his cabinet of ministers, and all the technocrats within the government service for a job well done. We don't always appreciate our own. It takes a foreign entity or person or institution to commend and applaud the efforts here in St. Lucia. So for the record, I want to say well done, Prime Minister, you and your cabinet of ministers. And I want to also say thanks to my team, the Department of Finance Management team and heads of department for the hard work and support the last 6 to 8 months since the pandemic. Thank you, and thank you for your time.
I do want to give the Prime Minister an opportunity to just wrap up 1 minute, wrap up of the whole discussion, if that's possible.
I just want to continue where the Madam Director left off and to certainly recognize the Minister of Health, the CMO, Mr. I could never pronounce his name right, and I apologize, sir, in advance, Mr. Ganawan? Ragnanan. I apologize, sir. The contact tracing team.
Dr. Fiscal.
The little things that people do that are very unsung. The simplicity of the idea that we say, oh, there are interviews that are taking place at the airport when persons coming in. But depending on those persons to do it the right way. Are the COVID tests that they're coming in with, are they authentic? Is the information real? And so to have 16,000 arrivals and only one person test positive 2 days after arriving really is a testament to the diligence that people are conducting the work in. All of the security people at the airport, the taxi drivers, bus drivers, thousands of people who are making this thing work. And I think that the director is 100% correct. Sometimes we depend on outside persons to acknowledge the success that we've had. The CMO and her team, world class in what they're doing. World class. The amount of countries that are leaning on St. Lucia and benefiting from what we have done. Our Attorney General's office and the legislations that they've put with regards to the COVID Act and staying on top of everything. World class, what they have done. The Ministry of Economic Development and the Ministry of Finance, and working out this three-pronged strategy and coming up with the ideas, but more importantly, executing it. Amazing. The PS of Tourism, the Minister of Tourism, the Tourism Authority. The new hotel, Royalton, started receiving guests yesterday. It's going to be 80% occupancy for the month of November. Sandals, opening up the 2 properties in a very difficult time, re-employing persons, bus drivers, farmers. 75% occupancy for the month of October. American Airlines flew at 76% occupancy for the month of October. British Airways now has added double the amount of airline seats that were coming in pre-COVID. These are the things that are making a significant difference, and all of us in St. Lucia need to take a bow. This last weekend, with the new cases that have come about, and without any form of legislation, of having to put a curfew in or anything, St. Lucians responded. And St. Lucians are showing us that they understand the delicate balance between health and economic recovery. So your health wellness, but also your economic wellness. And how do we have to balance this? And I just really want to thank the private sector. I want to thank all of the individuals. And I listened to them being interviewed and their articulation and understanding of the issue and evidence of their behavior. St. Lucia has a lot to be proud of. And I can say to you that the economic recovery plan that we've put in place is being touted as one of the best in the world. And we have it right here in our own backyard. And so we've practiced the discipline, we've thought things out, we've consulted with people, and it's working. And I genuinely believe that the next couple of weeks that we will all have even greater amount of confidence, because I think that we can show that we can coexist with COVID. Even with an outbreak in our midst, if we wear our face mask, if we do the hand sanitization, we practice social distancing, and for many of us who are working even in the hotel sector, having to forego our social programs temporarily in order to protect the guest and also to protect our own families, in hindsight will be viewed as a small sacrifice to have to be made in these very trying circumstances. So I just want to say thank you to everyone. I want to thank GIS and NTN for coming up with the new program that they have, and certainly the support from the media houses, allowing us to feed and distribute programs through them. So again, thank you very much for the opportunity. I want to say to all St. Lucians that we are on a great road to recovery. Does it mean we're not going to have bumps in the road? We are. And we just need to be prepared for that mentally and to adjust ourselves. And for the time being, I'm really looking for unity within St. Lucia by all of us to solve this problem. If you see somebody not wearing their face mask, it's not an insult. Be very diplomatic, but ask them to put their face mask on. If you see anybody doing something wrong, call them out. Recognize that persons coming in from Martinique, there's 737 cases in Martinique. Have them come through the right door so that everybody can be protected. Nobody's immune from this. So you believing that you can bring somebody in who's not been pre-tested and that's worth the risk, you're not just taking the risk for yourself, you're taking the risk for all of us, and we're not actually getting to be we're not going to be part of that decision. So let's just please continue to practice the discipline that we're doing. Let's make it through this together. Let's continue to encourage our brothers and sisters in the other islands, because we need to see their success. You will never hear us gloat about our own success. We always want to make sure that we're seeing the success with the other countries. And I want to thank my colleague prime ministers, both at the OECS and CARICOM level, for their continued support in this endeavor. But again, to all St. Lucians, thank you.
And we say thank you, Prime Minister, for the informative session today. We also thank the Director of Finance and, of course, Mr. Janai Leos and the team from the Ministry of Finance who are joining us in the studio, and also representatives from the Ministry of Economic Development. We say thank you to the media for all your pointed questions. Just to let you know, we have been in discussions in terms of having a stakeholders presentation, an economic update that will be solely for the media. We will be presenting those updates to other members of the society, but we felt it necessary to have an economic and fiscal update and also an update on other aspects of the economy specific to the media. And the statements today given by the Prime Minister and by the PS will also be shared with the media. Thank you to everyone for joining us wherever you are. Have a great day.